Hey traders, welcome to Charts and Coffee. Great to see everyone. Hope everyone's doing well. Happy Tuesday. All right, so let's get to it. We've got an interesting couple of days ahead of us. Number one, today's pretty quiet. Yes, we had some employment cost index, HPI, Chicago PMI, consumer confidence, and normally we actually might care a little bit about that data. Not really a big deal, only because hot zones, these scheduled high impact, high volume economic events, are relative to whatever's coming up. And tomorrow we have, forget ADP, forget ISM, forget JOLTS. We've got the FOMC statement, not as big a deal as the press conference. And the press conference is more important than the statement. And the statement's more important than the quarter point bump that we're likely to get. So quarter point hike baked into the cake. What does the statement tweak? Is it starting to align with the expectation that we're going to get one, maybe two more hikes and then hold? And then does the press conference back up? Does it clarify? Does it anchor what we assumed, we understood as a trading and investing public about the 2 p.m. event? There's 30 minutes between the two events. They really are a complementary set of events, because if Powell basically unravels whatever we thought the statement in the Fed funds rate means, we see a lot of 230 presser volatility. If he can just solidify what we think we understood, it tends to be an easier FOMC Wednesday. But then that's not it. We go into the ECB on Thursday. The central bank events, gang, are far, far, far more important. I know this might sound a little crazy, but they're far more important than really the temporary, incredible, no doubt, volatility that we're going to get from Apple, Amazon. Those aren't necessarily going to be the further reaching impact. So if we want to see volatility for maybe 1, 2, 3 sessions, yeah, earnings might do that. But longer term, where are we going to be in March, April, May? That is the culmination of those two really significant central bank events. So I'm not really that concerned about earnings, right? I'm much more interested in what is it that Powell and Lagarde are going to communicate Wednesday and Thursday, respectively. That is the economic calendar. I'm not going to emphasize earnings. And earnings are going to be the thing that everyone's talking about, but it won't necessarily have further reaching implications, right? So please remember, macro moves the market more significantly than, a handful of very important high concentration weighted stocks, but the macro is going to move the market far more significantly. All right, so let's go ahead and jump on over to the charts. And of course, your questions, the layout that we have been using the last few shows is the TOPS premium layout. We're going to be talking a whole lot more about that on the 15th. A lot of you have been asking, Rag, I see a new addition on your screen. And this is something we've been talking about quite a bit in the Sector Secrets Mastery. And that is, in this environment where daily time frame follow through can be a little bit more difficult to come by, in this environment where day trading is not necessarily, looking at a 5-minute time frame isn't something that's necessarily something that traders who in 2020, 2021, maybe even 2022 had time to do, right? We're finding that the 1 hour is serving lots of really important needs. One, Rag, I got to slow the markets down. I don't have the availability to my screen as I once did 12 months ago, 8 months ago, 6 months ago, right? And then, Rag, where do I find the follow through in what has felt to be a very frustrating market? And the answer to both of those is not necessarily day trading, but not necessarily longer term expectation and daily time frame swing trading either. It's a sweet spot at the 1 hour. All right, so you'll see a lot more of that on my screen. So with that being said, let's go ahead and jump into our questions. Good to see everybody. Hey there, Christina and Monica, Debbie, Derishka, good to see you all. Hey there, Paul. Hey there, Mark, Bill, great to see everyone. Shane, good morning. All right, so first up, Stacy, good morning. Hit the like button. I appreciate that, Stacy. I appreciate that very much. Absolutely. Okay, so let's get to it. Let me earn that like And first up, Mimi says, what point price with YM and, how much is each point worth? Sure. So if we're looking at the S&P, and Mimi, we'll be getting into this more. I'll be talking more about point values and alternatives because ES and YM are the mini S&P and Dow futures. The S&P futures, I would say if you're a brand new futures trader, Mimi, focus on the MES or maybe even the SPY puts and calls. ES is a very leveraged product. There's a lot of leverage behind, Dow is 5 points and $5 per point, or for, the smallest movement, a tick is really what it would be considered, is $5. For the NASDAQ, it's 20. For the S&P, it's 50. For the Russell, it's 50. These points from 41.43 to 41.40 or to 40.42 to 40.43 would be that move. $12.50 per quarter point. That's another way to look at it because these move in quarters. Remember that something as leveraged as the futures contracts can be very appealing. But please, and I love that you're asking, what's the dollar amount associated with the price? Please remember MES and SPY, which can be traded simply by looking at ES and then instead executing the trade idea in another symbol, which is what I teach, is a really effective way as you're taking those steps into futures trading. So thank you for the question. $5 for the Dow, 50 for the ES. All right. And by the way, again, don't presume then the Dow is lower risk because the Dow moves more points in any given hour than, say, the S&P or the NASDAQ do. Although the NAS is pretty volatile, too, in terms of sheer number of points it can move. All right. Next up, Robert, do the DPMR's daily price movement ranges correlate to average true range at all, or is it something completely different? It's something completely different. The common denominator between a PMR, a price movement range, and an ATR, an average true range, is probably range. That's really it. The way they're calculated is completely different. DPMRs, HPMRs, the PMR process is based on historical volatility, right? Average true range is usually 7, 14, 21 periods usually. So it's the difference between, let's say we're looking at a 1 hour chart, right? Just even the data is dramatically different, Robert. And the way in which we curate the data is also, again, dramatically different. The average true range on any given popular setting might be looking at a 7 setting, which means 7 1 hour candles. So I'm looking at the last 7 hours of range. 14, right? Just do the math or whatever. When you introduce the PMRs to a 1 hour chart, to a daily chart, to a 5-minute chart, we're talking 6 months. So there is a pattern within volatility that is repeating. And we quantify that with a range. And then we apply it to the chart. But the only way to see that pattern is to have enough data to say, all right, now it's emerging. I don't think you'll see the patterns in a 7, 14, or 21 period. Y'all remember that scene from Hunt for Red October? This is what I think about. You remember when the one guy on the sonar recognized the pattern for the Red October? When it was slow, the computer couldn't recognize the sound from, whales talking to each other. But when you sped it up, when you had more data, you could see the pattern, and it was rhythmic. It wasn't anything in nature. I don't know if you all remember that scene when he tells the captain, I know how to track it now. I know what to listen for, but he needed more data. He needed to be able to repeat the pattern enough to see it. That's PMRs, Hunt for Red October. So that's the big difference, Robert. Yes, the data is different. The curation of that data is different. But the real bottom line is, can I recognize the pattern? And we're just not going to see it in such a short look back as 7, 14, or 21. So thanks for the question. I appreciate it. All right. How are you doing? I haven't seen you in a very long time. Zyanda, how are you? Would it be possible to add major spot FX pairs to the Preemie HPMR? I appreciate the request. We don't really trade Forex that much here. It's sadly something that I love, but it's not something that we have a lot of, frankly, interest in. And I don't have plans for it in the near term. I'm not saying no, never, but in the US, Forex is, look, the most popular market in the world, the one that we focus on the most. I should say the US, the most popular market in the US is probably options on stocks and options on ETFs. That's very, very popular. Is for active traders. I'd say stocks are probably up there too themselves. This is a stock-oriented country for trading and investing. When I leave the US, my friend, I was in UK, but a few years ago, oh my gosh, currencies, everyone's fluent in currencies. It's just a different reality. But in the US, and as far as even brokers, it's just not there. Maybe someday we would create it as a separate pack. But right now, I got to be frank with you, I don't have plans for it. Mostly what we do when it comes to currencies, as we look at the currency ETFs, most of which are pretty darn liquid for the majors, and the futures currencies, which are pretty darn liquid for the majors as well. The Chicago Mercantile Exchange has been continually topping somewhere around $250 million in turnover per day, which is quite liquid. So $250 million. I know it's a far cry from Forex, but we just don't have the demand for it. And when I add more symbols to any of the PMRs, remember, we are then putting more load on Thinkorswim. So we're really, really choosy about what we add. So for now, I know it's probably a longer no than was needed, but right now the simple answer is no. But I at least wanted you to know why. Until there's more demand for something like that, I can't bog the platform and the indicator down with data that just isn't going to be used. And it's the same answer for certain stock symbols and for certain future symbols, right? We try to focus on the things that the widest group of traders are interested in, and that personally that I am finding the most success trading in. But I do love Forex. I really do. I just haven't been emphasizing it as much here with the simpler community. All right, next up, how about Len for a longer term on the 1 hour? I don't know that we have Len. Nob, we're still building out. I mean, we're still in the last stages of all the build out for the price movement ranges. And I don't believe we have Len on there, Lennar. But remember, it isn't just about the DPMRs, gang. Before DPMRs, think about layering the information you put on your chart. All right. And it's not that we may not add it. We'll take a look at it, Knob or Lever. What I would say is this. Let's start with the market structure first, because DPMRs or no DPMRs, without tops, without the way in which we can recognize market structure, even a DPMR can be used incorrectly. So that means the first thing I want to do, I'm going to grab my drawing tools here, is head down to the very bottom of the chart. This is structure again. Whenever I talk about structure, we have color coded it to the point where it's traffic light simple, right? Red, yellow, or green. And it's a lot like a traffic light, right? Green is bullish, red is bearish, yellow is neutral. That's the first step. Every trade I make, whether that be a 5-minute chart or a weekly chart, the first step is down there. This is going to tell me which direction the probability is. A lot of traders get direction wrong. They find setups, right? But is that setup in the direction of the path of least resistance? Yes. So I would, for the most part, want to be long. Now I've got the most important piece of my trading plan set. The next step then becomes off which level, right? So even before I get to a DPMR would be step 2. Where can I be a buyer from? But realize that without that first step, without tops, without understanding market structure, without knowing that we do have periods of great volatility on this chart, grab candles are helping me with that. The wave is helping me with that, right? Before I get even to a DPMR or anything else, market structure, multi-trend, wave, grab, that has to be the first step. And so then I can look to a Darvis, right? Then I can look to a DPMR or an HPMR. Then I can look to propulsion, determine, all right, where do I want to be a buyer? I would love to see another test like this. Yeah, I would definitely look for something like that. And I want to be long. But that's the process, gang. That's what Tops does. That's the system. Yeah, that's the system. All right, next up, Is DPMR going to be included in the HPMR subscription? Sergio, they're two different indicators. They're two different curations of data. So the simple answer is no. And not everybody wants to use DPMRs and not everybody wants to use HPMRs, but we are going to find a way to be able to offer both for those of you that want it in a more affordable way. That is in the works. All right. All right, next up, and by the way, gang, what's so important about what I just walked you through? I'm happy to talk about process all day long. But remember, the process that I'm walking you through is reliant on a system. And that system is reliant on automating things that we as humans tend to add a lot of feel and a lot of emotion and a lot of opinion to. The way that I'm able to trade without that feel and opinion and emotion, none of which is going to help us as a trader, is to automate the process in that we have indicators that say, this is what you're allowed to do. This is why, this is where. So at this stage in my career, 35 years in, I'm realizing, Rog, how can I take the things that I've been doing manually for 3 decades and automate, right? This isn't about new things. This is about automating things that will quicken the learning curve for someone who hasn't been at this for 3 decades. So remember, we want to take things and take the emotion and the feel and the opinion out of it. The more those things are at work, the more we're going to be subjected to mistakes, right? And decisions that are not based on what we see, but what we think, right? So those indicators are really key to the process. All right, next up is, and I appreciate the question, Sergio. Speaking of Forex, what is the difference in trading 6E and Euro US? One is a futures contract with all the implications of a futures contract. It is exchange traded. There are fees that are going to go to the exchange. It's not truly 24-hour. It's lower liquidity. Nothing wrong with it. It's just a different way of looking at the euro on exchange. Euro US is Forex. Forex is without a centralized exchange. Forex is the network of banks and companies and brokers that are communicating what they feel the value of the euro versus US dollar is, which is simply, what's the rate if we all got on a plane and landed in Charles de Gaulle, we're in Paris, and I've got a pocket full of dollars, how many euro do I get for each dollar that I have? So the difference is, looking at an off-exchange market, the biggest market in the world, the symbol that you asked about, Trader Momo, is the biggest market of any kind in the world. Euro US is the biggest symbol in the biggest market. So it's really a liquidity, in many ways, access tool. And then I think another really important thing to differentiate is you can't use volume tools on Forex because it's off-exchange. There's no way to know what all the volume is. There's no way to say, this is all the volume coming into this symbol. I can do that with 6E. I can't do that with Euro US. So one of the other reasons that I like to keep an eye on the way in which the different advantages and disadvantages, and by the way, Forex is still pretty highly leveraged. I believe it's still 50 to 1 in most parts of the earth. All right. Paul says we're fluent in US dollar conversion here in Canada. I would imagine so. I would, Paul. And, I love that. Look, it's a funny US phenomenon where currencies are just not something that a lot of traders are fluent in, interested in. They're far more interested in Apple than the euro. It's just the way that nothing good, nothing bad. It just is what it is. Yeah. All right. Can we take a look at PayPal? Sure. Let's jump on over there. All right. PayPal, choppy, arguably overbought, below the 200. Remember I said about structure? Everything's automated, gang. That's what Tops does, right? That's what Tops does. We make everything objective, right? So I would say be careful. We're more or less bearish on PayPal, but I will tell you what, gang, we've been talking about this when it comes to Tesla and Amazon. I am not a bear in this market. I want to find stocks that are stronger. I'm not looking for counter trend trades. I don't hate my money. I'm not necessarily looking for overbought shorts either. I'd rather be a buyer on the other side of that move. But we do seem to have quite a few of overbought symbols, as long as we remember that the path of least resistance continues to be mostly higher or we prioritize the trends. How do we do that? We need a way to automate the process. And we go right back to tops, wave, grab, multi-trend. So that's something that I would keep in mind in terms of if there are overbought markets, do we really want to commit to them? I would say find an uptrend to buy the dip on, or find an oversold market to get long in. And then if you do want to take a short, be a little bit more nimble about the first target. Don't expect lower lows necessarily on those daily time frames. All right, gang. Just like that, I am out of time and even ran over. As always, gang, thank you so much for the questions. Thank you so much for dedicating yourselves to being better traders. We're going to tackle a lot of that. What am I doing in 2023? February 15th, save the date, pencil that in. I'm looking forward to seeing y'all. And in the meanwhile, be good to each other. Today is a caution day, end of month, so be careful. End of month shenanigans are real, not as intensive as end of year or end of quarter, but be careful. I will see you all tomorrow, same time, same station. Be good to each other.